Central bank. The central bank is not your regular bank. You can't just walk in and open an account there. You can't get a personal loan from it either, like you would from any normal bank. Its job is way bigger than that. This is the place that actually prints the money. Every single dollar in the country starts here. And here's the big one. This is the place that sets interest rates. So when you hear on the news rates went up or rates went down, that's a decision coming straight from the central bank. And that decision hits you directly. Your mortgage payment, your car payment, even the interest you're earning on your savings account. On top of that, it keeps an eye on every other bank out there, making sure they're playing by the rules, making sure the whole financial system doesn't spiral into chaos. And it's constantly fighting to keep prices stable, basically trying to stop inflation from quietly eating away at the value of your money. In the US, it's called the Federal Reserve. In Europe, it's the European Central Bank. Different names, same job, everywhere. Commercial bank. This next one is the bank you're actually dealing with in your everyday life. Your paycheck lands here, your debit card comes from here. And when you need a car loan or a mortgage, this is exactly where you go. Its job is pretty simple, at least on the surface. It takes money from people who deposited, like you, and lends that money out to people who need it. And in the middle, it takes a small cut as profit. That's the interest. So here's the thing, when you put money in a savings account, the bank isn't just sitting on it. It's actually using that money, lending it out to someone else and giving you a small slice of the profit as interest. And unlike the central bank, this one is everywhere. Every street's got a branch. This is the bank you actually see day in and day out. But here's what you need to know. This bank doesn't just do whatever it wants. It's watched closely by the central bank, and it has to follow strict rules, like how much money it's required to keep in reserve and how much it's actually allowed to lend out. Investment bank. This bank is a whole different animal from the last one. You won't find it on your street corner, and it's not dealing with regular people at all. No savings accounts, no personal loans, no debit cards. Its whole world is big corporations and governments. And it mainly does three things. First, when a huge company wants to go public for the first time, sell shares to everyday investors, what's called an IPO. The investment bank runs the entire show. It sets the share price. It connects the company with the right investors. Second, when two big companies want to merge or one wants to buy out another, mergers and acquisitions, the investment bank is the one crunching the numbers on the whole deal, negotiating the terms, fighting for whoever hired them. Third, it helps companies and governments raise massive amounts of money by issuing bonds, instead of just walking into a commercial bank for a regular loan. So here's the simple version. A commercial bank deals with your money. An investment bank deals with corporate money and government money. And we're talking way bigger numbers, sometimes billions of dollars in a single deal. Some of the biggest names in this game? Goldman Sachs, JP Morgan. Islamic Bank. This bank is completely different from everything we've covered so far. And most people in the Western world don't even know it exists. The core idea? Interest is banned completely. Unlike a regular commercial bank that charges interest on loans and pays you interest on savings, an Islamic bank doesn't operate that way at all. Because under Islamic law, that's forbidden. Instead of interest, it runs on a profit and loss sharing system. So instead of the bank lending you money and waiting for a fixed interest payment, it actually becomes your partner in the deal, in the investment. If you profit, the bank takes a cut. If you lose, the bank shares in that loss too. Here's a simple example. Want to buy a house? A traditional bank lends you the money and you pay it back with interest. An Islamic bank does it differently. The bank actually buys the house itself, then sells it to you in installments, at a price you both agree on up front. No interest in the traditional sense at all. This system exists in over 100 countries worldwide, and the entire industry is now worth around $4 trillion globally. London is actually a huge example of this. It's got fully independent Islamic banks like Al Rayyan Bank and Gatehouse Bank. Not just departments inside regular banks, actual standalone institutions. Even in the US, where independent Islamic banks aren't as widespread, most major banks have opened up Sharia-compliant divisions or programs for their Muslim customers. World Bank. This bank is nothing like anything we've covered so far. It doesn't deal with regular people. It doesn't even deal with companies. Its only customers are entire countries. So when a whole nation needs money, whether it's for infrastructure, roads, power grids, hospitals, or to get through an economic crisis or fund long-term development projects, it doesn't go to some regular commercial bank. It goes to the World Bank. Here's the core idea. The World Bank offers loans on way easier terms than a normal commercial loan. Super low interest rates, sometimes long grace periods before a country even has to start paying it back. The goal isn't profit. The goal is helping developing nations actually grow. Simple example, a developing country wants to build a power grid out in some remote rural area. A regular commercial bank might just say no. High risk, low reward. But the World Bank will fund a project like that because its whole mission is development, not quick profit. And here's the thing that sets it apart from every single bank we've talked about. The World Bank is owned by 189 member countries together, not one nation, not some private entity, and that's exactly what makes it completely different from everything else on this list.